Good morning. This is Dylan Jovine with Behind the Markets. Happy Thursday. Today is Thursday, April 24th. Today we are going to stay with debt, the bond markets, and tariffs. One more day to answer this, at least, because there's a lot happening in the bond market that is really unmasking the weakness of the United States in terms of our debt problems. It's really starting to choke us, and we're really starting to see this. But first, I'm going to begin by answering a question that I've been asked probably 50 times in the past 2 weeks. Which foreigners hold the most U.S. debt? And I came up with the list here. Japan owns $1 trillion, $1,080 billion. China owns $761 billion. The United Kingdom owns $740 billion. Luxembourg, $410 billion. Belgium, $378 billion. Canada, $351 billion. Cayman Islands, $405 billion. France, $335 billion. Ireland, $330 billion. Switzerland, $301 billion. Taiwan, $290 billion. Hong Kong, $256 billion. So basically, these are the largest foreign owners of U.S. debt. Now, remember something. In the past few years, when Biden was president, Janet Yellen began to issue short-term bonds because nobody wanted to lend the government money for the long term, certainly not at the interest rates that the long end of the curve was offering. Nobody wanted to lend given the massive fiscal deficits, given the massive budget deficits, given the massive amounts of money that the United States is borrowing every freaking week. No foreigners, nobody, frankly, American or foreigners, wanted to loan the United States money for 30 years because they know that whatever the U.S. pays them, 4.5%, 4.75%, isn't going to account for the debasement of the currency, basically. It's just not going to happen. You're going to lose dollars in real sense. In other words, that interest rate being paid doesn't really reflect the actual inflation and debasement of the currency in their view and in my view too, which is why in Midnight America and a bunch of other things, I've been telling folks to hold on to short-term treasuries, things that kind of retire in a year, basically, that resolve in a year. And we talked about Liberation Day, why Trump flip-flopped so bad from the April 2nd announcement of Liberation Day, and then April 9th, he canceled Liberation Day. And it's a very important thing to point out to you. In the week of April 11th, yields on 10-year U.S. Treasuries saw their biggest leap in a quarter of a century. I did not mention that yesterday. That's a very interesting statistic that I didn't pick up on. And that was a sign that many of these creditors were selling, not just going on a buyer strike, but selling U.S. sovereign debt very quickly. Remember, we have $37 trillion in debt, okay? And because people don't want to buy our long-term bonds, under the Biden administration, Janet Yellen was forced, the Treasury Secretary, to sell short-term bonds. But short-term bonds have to be rolled over every 3 years, depending on the length of the bond. So every 2 or 3 years, we're rolling over trillions of dollars in debt. And of course, this year, 2025, we have $3 trillion in debt to roll over. So what I'm telling you basically is not only are we going to issue new debt, we have to roll over $3 trillion in short-term debt from last year or 2 years ago that's coming due. We need a lot of people, a lot of help from a lot of different countries to buy our bonds. That's why you can see now, even Trump pulling back on his tariff plan, you can see now how our debt size and boatload of debt is beginning to limit our freedom of action. It's beginning to constrain the movement that the United States, the space that we have to actually move and dictate policy. Basically, our creditors are really starting to call the shots on the United States of America, which is a terrible position to be in. Look, we're all adults. We've all lived, God willing, long enough lives. We've all gotten into financial pinches in the past. Who hasn't? Especially if you've owned a business. But if you live long enough, at some point in your life, you're going to come across a difficult time where you start doing the math on, oh my goodness, I'm in trouble financially. Some of you guys went through it during the real estate crash. Some of you guys went through it during the dot-com crash. Some of you guys went through it during COVID. We all go through difficult times. The United States needs to go through one of those difficult times. I know that when I went through a difficult time after my second business, basically I had to close it down. It failed. I remember sitting down and saying, okay, I have to come up with a sheet where I list on one side necessities and on the other side luxuries. And basically anything, there were necessities, electricity, food, water, car, gas, all these things, mortgage, those are the necessities. Luxuries were anything else. And I basically had to cut out luxuries from my diet to get myself, my own house back in fiscal order. And my suspicion is we're going to have to do the same. But you're all already starting to see that work its way through the market. And I'll finish by saying this. We're also seeing this volatility in the stock market, which is just being pummeled from that 38,000 area to 40,000, trying to find a place, that 2,000 point range there. My estimation is that's not going to get resolved really until we have a little bit more clarity on these tariffs. Anyway, that's all I have. I will speak to you tomorrow. Have a wonderful day.